Eric Mother with Mother.com with world market analysis for the weekend of May 21st and May 22nd, 2016. Take a look at how Asian markets close here. We can pretty much see a nice close, positive gain for most of the markets, if not for the majority of the markets. Take a look at European markets, and we can see that European markets right now also showing a nice gain for Friday's session, up about 1.5 and higher for most of the markets there. So a nice gain for the day. Take a look at the Americas with about half a day before the close of the week on Friday here, and we can see that Brazilian market slightly down, Canadian market slightly up, pretty much a mixed picture, or let's say mostly to the positive. US markets here with about half a session to go on Friday. We can see that in the US here, markets are also right now looking like they are showing a nice gain on average, about 1% or something in that range. And we can see that gold is slightly down, and so is crude oil. So let's go to the world charts. Let's take a look at the charts here. We begin by taking a look at the Australian market. And before I do, just a quick note here. There's a good likelihood that next weekend I might not have the world market analysis just because I'm going to be traveling. But if I do get some time, I'll make a point of recording a video. But for now, it looks like more than likely the next time I record a video after this one is probably going to be in 2 weeks' time. Take a look at the Australian market here, and what we are looking at is the possibility that we are coming back to test this break point of the highs. We've been talking about this for a couple of weeks. This break here is what brought the market off the highs, and so we are coming back to test that line. As you can see, as of right now, we are still not able to move above that line. I think this is good enough resistance to suspect that now the potential for the next swing trade is going to be more than likely to the downside, unless and until the market can clear the current weekly closing high for 2016. The level to watch there is any movement above 5396.30. So any movement above that would suggest that it is finally above the resistance on this resistance here, and also finally that it is moving to fresh weekly high. So it does need to take and break out above that level again. 5396.30 would suggest that it has cleared the resistance. But for now, in my opinion, this looks like resistance, and we can expect a pull. Now, one thing you'll notice here is, or at least one thing I noticed, is most of the markets are pretty much in a very confusing phase, and lots of confusion on most time frames. So you're going to see that generally speaking, markets are sideways, or at least in some type of a trading range. And the best way I can show this is if you take a look at the Japanese market, the Nikkei, you can see that there's some type of a wedge here. If you take the recent weekly closing highs, you see a price wedge. The recent weekly closing lows, you see that there's a price wedge here. So we are stuck in this range until we can get out of that range. And the RSI confirms this wedge, because just take the highs. You can see that we're back to that top side on the weekly, and the bottom side is also showing support. So we got two wedges in price and the RSI. And that's why the market is stuck in a confusing range. In fact, if you take a look at the Nifty, the Indian market here, we can see that, as we had discussed the last couple of weeks, if you take the weekly closing highs, you'll draw a straight line that pretty much is here showing topside resistance. And if you take the lows here on a weekly closing basis, you get some type of a wedge somewhere around there. So I think that's a wedge that is still playing out. The RSI also shows a wedge formation. You can take a look at the top side resistance and now bottom side. So we got two things going here in terms of price and wedge resistance. So we might have to eventually wait for a breakout here, or a breakdown for the next swing trade, or a breakout above that RSI resistance line for the next potential upside move, or a break of this short-term lows line for a move lower. So we are stuck in a range, and you'll notice lots of confusion in markets, not really sure which way the market wants to go. Net seems like a sideways market. Now, if you take a look at the hourly, you'll see that the hourly is also, in my opinion, stuck in a range. You can see top side resistance on the Nifty, bottom side support. So even here we see that there's some type of a wedge, and even on the hourly you can see here wedge formation, bottom side support, top side resistance. That's why the market is pretty much very confusing at the current moment. Now if you take a look at the monthly for the Nifty, you can see that on the monthly there's still some work the market needs to do, and it is to clear recent monthly closing highs. So take this monthly closing high, the monthly closing high there, and this one, you draw a nice straight line, which definitely is resistance for now until the market can move above this well-defined line of resistance. So for now, if pressed to pick one direction, we can say that until we can move above this resistance line, net, generally speaking, we have to assume that the market might resolve to the downside. If we take a look at the South African market, I want to show you that many markets across the globe have this type of wedge type formation, which is pretty much an area of indecision and not too much happening here until we can either break out for a strong move higher, or potentially we can break down for a move lower. So right now we are stuck in that RSI wedge. Market's pretty much sideways. We are also generally trading around the moving averages on the weekly. So lots of indecision here. Tough to tell which way the market wants to go. And so we have to be a little bit patient before we can get the next meaningful direction. If you take a look at where the French market closed on Friday, it's an interesting number here. It closed at 4353.90. Why is this number critical here? It's interesting because if you go to the chart, and again, just take note of the close here, 4353.90. We'll see that the relevance of that is this was the monthly closing low we were watching, and the stock had been, or the stock market, the French market had been trading below that. So it looked like this was one of the worst looking markets in terms of potential for lower prices. And of course, the level we were watching there was 4353.55. Very hard to see. Anyway, let me try this. 433.55. So this was the monthly closing low here, but now we are back below that. As you can see, we closed above that for the week. So the monthly chart for the French market is not breaking down, and they do have similar charts to that of the German market. For number one, let me show you here. Simply put, is there's two lines here that we can use for reason why it is bouncing as of Friday's action. Number one is this line here is holding, and then number two is the other line which gave us this entry off the lows. So there was a movement here which gave us this movement here off the lows. We draw a line from there, and even this line is showing support. So you got support on those two lines, which might explain why we had some type of a move higher as of Friday's action. So the daily chart is not breaking down. Similar to this type of action, you can also see the German market, the DAX, did show daily support, and that's why the markets, I can say, did have a nice showing as of Friday's action. And we had discussed this previously. If you take a look at the DAX, this breakout short term on the RSI, we do realize was a positive move, brought the market off the lows of 2016 so far, and we've been grinding higher. Draw a line from there, should be somewhere around there. You can see the market has bounced before on this line here for the lows there, and recently we've been holding above this line, and as of Friday's move, so there the daily is holding. And in fact, this is not the only daily chart, and again it held as of Friday. We have a move here which shows that it is responding to that green line. So the daily charts are constructive. If you take a look at the FTSE, you'll actually see this is very well displayed by support, as we discussed last weekend. The FTSE, this is a live chart here, coming back to show support on this line. Let me use different colors here. So coming back to show support on this line here, which is a line we drew last weekend, and then coming back to test the perfect entry of the lows, and that is what I call the uniformity method. So this movement here, we know that that movement was successful in bringing the market off the lows, and so we draw a line from there, and you can see that the market did respond to that line with uniform activity support, and that's why we are getting this bounce as of Friday's action. So really, until we can break through some of these daily support lines, we have to say the market is pretty much either sideways or potentially wants to move higher on some of these markets. It's not until, or let me put it this way, it's until at some point should we break through these support lines, that is when we can start expecting a low market. But with support coming exactly where you should expect support to be, you have to assume that the market is by itself having its own reason why it is holding. So this line held, which is positive for bulls, and also we can see here that the indecision continues because this line of the lows also held. So until such a time as we can be below those two lines, the market is generally constructive and tough to kill a market that is finding support where it needs to find support. If you take a look at the Canadian market right now, it is doing its best to test these highs, and bulls would like the market to move above the current weekly closing high for 2016. The level to watch there is for the bulls to see the market move above 13,951.45. So this is the current confirmed weekly closing high. If the market can move above that, then that is what the bulls want to see. And once it moves above that level, you'd want to see it stay above it if this market is truly going to be moving higher. And of course, we can see here that there's an argument that this is actually a good trend because the 13-week moving average is moving above the 34-week moving average, which tends generally to suggest an upward sloping market, just like we had the exact opposite when the 13-week moving average went below. So here we have the 13-week moving average going below the 34-week moving average here. And of course, we know that the market did go on a major move lower. So here we might have the exact opposite. And so one can expect that all we need to do here is the market to stay above 2016's weekly closing high. A successful breakout would confirm that there is the possibility of higher markets based on the breakout moving the moving averages even higher. Now, that's the bullish argument, that a breakout takes the market higher. And keep in mind that we've been talking about the market coming back to test this level here. So let's take all, so that those are bullish arguments there for a strong market. But now keep in mind, we are coming back to test this level here. And this break on the RSI brought the market off the highs for 2015. So we are coming back here and we need to be above this RSI line. Otherwise, if we stall and form a double top, so the argument here is if we stall as of next week and form a double top, this is going to be bearish. So truly, in simple terms, the market does need to break out. Otherwise, it might form a double top on the weekly RSI. And if that's the case, then instead of having a bullish market, as far as the Canadian market is concerned, with a double top here, that would suggest the possibility of lower prices. So a breakout is needed if this market is to continue looking and moving higher. Now, if you take a look at the Brazilian market, I've been talking about this. I think the Brazilian market on a long-term basis, not day to day, but month to month, I still hold the view here that we have already seen a major sell signal, because if you take the line connecting RSI highs on the monthly, going back to about 2002, you see that this line connects very nicely with the tops there, or you can even draw it from this high. The net result is that as of this current month, with a move lower, this is confirming resistance right there. So that's one layer of resistance on the monthly, and also coming back to test the previous break, and we haven't been able to move above the previous break. So this line here, which is the break of 2011, that break has been a problem. Since off the highs there in 2011, draw a line from there, and this has been an ideal setup where every time we see a uniform activity rejection, we get a high for the Brazilian market. Uniform activity rejection here for the highs there. We touch a red line here for the highs there on a monthly basis, and now we've already seen resistance on that line. So month to month, it looks like the Brazilian market is poised for lower prices. And like I said, not day to day, but month to month. This here does show a market that could eventually see much lower prices. On the daily, we see a little bit of a confusing setup here because the daily is not broken, and I'll show you why. Because take a look at this break line on the daily RSI for the EWZ. So there was a break here. This break was a problem because the market drifted lower at the time. You draw a line from there. We should be somewhere around here, and I'm gonna change colors here. So okay, so you draw a line from here. We should be somewhere around there. And you can see that here we had resistance on this line for the highs right there, and we drifted lower. But here's the key. Once we jumped above that line here, we've not looked back. We came close to holding support on the line there for these lows and a perfect recovery. And now we are showing support on this line. All I'm saying here is a day to day, there is possibility of higher prices for the Brazilian market until at some point until we break down below this line. So day to day, and we've seen this on the other charts, the daily charts are very constructive. We saw that in Europe, and we see the same thing in the US markets. When I do part 1, daily charts are holding. Until the daily charts break down, we have to assume that the market is stable to relatively bullish short term. We shall see how it goes. And again, more than likely I might not have the weekend analysis for this upcoming weekend. Wish you all the best. Until I see you guys later. Eric Muadid, Muadid.com. As always, good luck, peace, and blessings. E. I see.